If you stumbled across this video, what I suggest you do if you want to start at the beginning of the series is go to YouTube search bar, type in one dot beginner day trading introduction, then go to filters, sort by upload date, and you should see the first one here. So go to the name here, go to videos, and then sort by oldest and start watching from the first one. In this video, maybe, I'm going to try to cover, so what are the U.S. stock market trading hours and why it matters, and how will you handle yourself as a trader, what kind of trader are you going to be, and it depends on several factors. What's so important about the opening and closing hours and the name? What is technical versus fundamental analysis? What is due diligence or DD? What is FOMO? And really, I would love to get to these two because these two would start helping you right away with your trading. But I want to cover these. So we'll see what we get to. In the last video, we played quite a bit more with a stock screener. We used Yahoo Finance's screener, and I liked it. We tried to actually improve our stock selection criteria, our filtering, come up with some decent stocks to actually use in our Webull.com trading site that we're doing paper trade and to train ourselves on day trading. And I'm sorry I neglected to mention that I'm from the U.S., I live in the U.S., and so I'm thinking about U.S. trading hours. And so what are the U.S. stock market trading hours, and why is that important for us to know? The normal U.S. stock market trading hours are from 9:30 a.m. to 4 p.m. Monday through Friday, with the exception of certain holidays. There is also something called pre-market trading hours and aftermarket trading hours, and that varies. And not every stock trades at all those hours. In fact, the penny stocks, most of them, a lot of them don't trade during the pre-market or after hours. And for us as penny stock day traders who are starting out, I would recommend you stay away completely from pre-market and after hours trading because, again, volume is your friend, and it could be that the volume is definitely not going to be enough during pre-market and after hours. So now that we know the normal trading hours, let's talk about, I don't want to call it your trading strategy, but what kind of trader are you going to be? So for example, you have to take into account how much time do you have during the day of 9:30 to 4. Are you at a job where it's impossible for you to do any of this? Even if you did have the time at your job, are you going to be able to access the tools that you need? Are you going to be able to watch the actual stock movement minute by minute or often enough? These are things that you're going to have to take into account to determine how are you going to be able to trade. Not to be discouraged, but you're going to have to make some adjustments. Another thing that you're going to have to take into account to determine what kind of a trader you're going to be is how much screen real estate do you have. I hope you're not using your smartphone. Maybe you're using a Chromebook, or you only have a small laptop screen, or maybe you do have a screen attached to your laptop or desktop, or maybe you have multiple screens. As you can see, these people are serious about the trade. Look at the number of monitors this gentleman is using. So that will determine what kind of trader you're going to be, how you're going to handle trading. You don't have to feel discouraged if you're missing some of the time or the screen real estate or the speed. you can still do trading. There are tools and techniques available to help you trade even if you can't devote the full time during the day for trading. And we'll get to those as time goes on. If you can make money fake, or paper trading on Webull.com, then you can make money when you choose to start using your own money. Okay, since I love to draw, I will pick any opportunity to do so. And to me, a picture is worth, a lot of words. So here we have a graph. As usual, the vertical is price, the horizontal is time. In this case, call this a full trading day. So we're discussing what is up with the big deal with the opening and closing hours of the trading day. So that would be these two, opening and closing of the day. And I divided it up in the graph here. And so if you'll notice, I really exaggerated this, but I tried to draw some extreme volatility in the opening hour and some more volatility in the closing hour. And so that would be from 9:30 to 10:30 a.m. and from 3:30 to 4:30 p.m., depending on who you talk to. And they are usually referred to as power hour, both of those, depending again on who you talk to. And the reason perhaps for the morning one was based on some news about the stock that occurred before the opening bell or the previous day. And on the end, it could be based on traders who want to get out of a position or into a new position before the end of the day. Now, this is not, don't take this as every stock that I'm going to trade in does this. I'm just saying this is something that's very common to be aware of. And since volume and volatility can be our friend as day traders, and also taking into account everything I've just said about, what kind of trader you're going to be, how much time do you have, and so forth, you may want to definitely take all this into consideration. I'm really just briefly touching on everything as an introduction. I'm not really doing a deep dive right now, but right now we have made it to here. So let's talk about technical versus fundamental analysis. And I kind of alluded to why we want to do this subject, because I said that the opening hour, power hour, could be based on news or other events that happened prior to opening bell or the prior day, and closing hour, power hour, wanting to get in and out of a position. So let's talk about technical versus fundamental analysis. This is a very, very brief, very shallow, superficial introduction into these two new terms, technical analysis and fundamental analysis. With technical analysis, we've sort of kind of been doing that. We were looking at charts and candlesticks and trends and support and resistance and price and volume and patterns that we talked about. Whereas we haven't done any of this. Fundamental analysis will look at a company, what's the industry sector? Are they green energy? Are they oil? Are they marketing? Are they pharma? Farming? You name it. What's the industry sector? They look at that and the overall sector and the company itself. They look at financial statements. They look who's the CEO. They look at published goals, which could be PRs, industry news, and a lot more. Typically, technical analysts say that the stock chart and related data already have priced in all of this, and there's no need to do this. That's kind of like a purist approach. Now, with our focus as day traders, penny stock traders, or at most swing traders, this technical analysis is essentially short term. It's rather quick. You're looking at the chart, right, for the day or a few days before or whatever. Whereas if you're going to do fundamental analysis, you should be already aware that this is going to take time to gather and analyze and figure out. So that's way more long term. Okay, our next topic is what is due diligence or DD? Due diligence is defined as an investigation. Let's just keep it right there, of an investigation to confirm all the facts. So not doing your DD, not doing your due diligence is, for example, you go on Reddit, you find a penny stock subreddit, you go on iHub, Investor Hub, you find, you go on other groups, and you're essentially just going by what people are posting. Hey man, let's get into this stock today, this one's tomorrow, whatever. And you're just like a sheep following the crowd. You don't know if that person has an ulterior motive like pump and dump. And so doing your DD, doing your due diligence, is defined as you knowing, determining the why of what you do. Why am I getting into the stock now? Why am I getting out of this stock now? So due diligence, the act of doing your DD, could be technical analysis, it could be fundamental analysis, and it also means knowing that one takes longer typically than the other. It could be, looking at news articles. And I bring this up also because this also is a factor into the trading day hours, how much time you have, and that should start you thinking that I probably need to spend some time doing my due diligence, whether technical or fundamental or a mix of both, or looking at reading articles. Maybe the morning before the trading day starts, maybe the night before the next morning, and deciding what it is, being armed with information and deciding, okay, these are the stocks, obviously looking at stock screeners like we did, and whatever it is, however much planning you want to do or have time to do, and then make a plan and execute the plan. We are going to end this video right here. I'm glad we finally got to this one anyway. What is FOMO? Fear of missing out. That is when your emotions, greed, fear, whatever, start to take over because you haven't made enough money. You see the price going up, and you're like, man, I got to take advantage. Like, how high can it go? Or you see it plummeting. It is typically, but not always, typically when you deviated from your logical, studied stock trading plan for that day or days that you spent time planning to do, and you start now deviating from it on emotion, on something that's going on, not based on logic or reason. So I will see you in the next video, and hopefully we can start on notifications and RSI.